Alright, this analysis is going into Monday, May, June 1st. This is obviously a new day, a new week, but also a new month, right? So I'm going to start this analysis looking at a 3 month look back, looking at a 3 week look back, uh, and obviously the 3 day look back, right? And then what we'll try to identify is not only analyze how Monday itself could form, but also looking at important levels for the monthly power of three, right? And as that's obviously piece of puzzles that we need to blend in, right, to increase the probabilities, right, of in choosing a direction on the lower time frame, right, such as daily profiles, weekly profiles. If we're able to understand how the higher time frame profile, right, how and where is it forming, then obviously you get much better chances of getting the trend right on the lower time frame. Okay, so let's start first of all looking at a 3 month look back. So that would be from the month of March until the previous day's high. And here what we can see is that you can see the institutional accumulation. Okay, this is again looking at a perspective of a yearly profile, price trading the most amount of contracts in discount, right? And then the second quarter opens and price starts distributing higher at very low resistance in here. Okay, so I mean, this, to me, this range low here, obviously this is a higher time frame dealing range low, right? Let me see on a perspective of a monthly chart. But for the daily chart and for the current monthly power of three, this dealing range isn't of relevance in my opinion. At least, sorry, this dealing range low, right? So the weekly or monthly order block that's located at these levels, right, is very close to impossible that the market will revisit these levels. But something interesting, obviously, is to keep the standard deviations, right? I'm using the ones from the Nvidia shakeout, right? Nvidia had expanded, and then the next day at the open drops lower, and from there that leads to the creation of the yearly low. Okay, so I'm using these standard deviations. You can see that, right, the reaccumulation phase at 1 to 1.5. So I think that the range in between 31,000 to 32,000 is a realistic objective for the month of June. Right, so this looking at premium targets, essentially going inside the closure of the quarter, right? Because June is the last month of the second quarter, right? And so far, what has the quarter done? It has created two classic buy months, right? The month of April being a classic buy profile, the month of May being a classic buy profile. And so far, the trend is still very bullish, right? Here, June is opening inside of a smaller dealing range, which we'll look at in a second, in a lower time frame dealing range here, I mean. Right, and has a bunch of discount arrays behind it, right? Such as here we have a suspension block, we have a bullish order block, we have a bullish breaker block. Okay, so we can also well, sorry, before getting into the previous month, what I wanted to do is simply grade the current higher time frame dealing range. Right, and what we can see is that we have a swing low here, right? We have this is not the low of the month of May. This is more relevant on the perspective of a 3-week look back. We'll look at that on the 4-hour chart. But you can see that we have a swing low created at 25% of this current higher time frame dealing range. Right, so what this represents is that at these levels we will find the relevant order block, okay, so dealing range low for the range that where June is opening at. Okay, so having looked at a 3-month look back, we can now look at the previous month's look back, obviously we said that this profile here is a classic buy. Price opens, gaps higher above the April highs, expands, mid candle consolidates, and at the closure of the candle, right, this here last week, right, towards the end of the third week into last week, right, price saw a phase of expansion. Okay, and what you can see here, price traded the most amount of contracts inside of the last range right at 50%, right, or around 50% of that monthly range. And if you look at the candles, right, what we see is that at these levels we have a series of order block. Okay, so this order block represents the current dealing range low, okay, into the open of June. Right, so if ever the market were to retrace inside of this range, okay, say in the first week or in the second week of June, personally my anticipation will be low of month from these levels. Now, if the market is really bullish, okay, it doesn't even need to trade back, say, to the breaker, the order block, the volume imbalance, right, the suspension block, the fair value gap. If price is really bullish, can simply trade higher already from these levels. But to be able to look at this, we have to look at a 3-week look back and at a 3-day look back, right, to see what price left inside of this range here. Because yes, we have a dealing range low located at 50% of the previous month's profile, but what you can see here is that the previous week might left an intermediate term low here, right, a retracement inside of the range that closes a fair value gap, this fair value gap cutting through, right, those two PD arrays that we talked about. Okay, so key discount area for the month of June, if ever price is going to revisit it, I'm personally looking at the range of the bullish order block. Right, if ever the series of down close candle is revisited, I'll start framing the possibility, okay, of seeing low of month form at these levels, and you can track this through weekly profiles, and this can present an opportunity for a one shot, one kill for the month of June. Okay. Okay, so that's covered for the 3-month look back, the previous month's range. We looked at premium targets from the standard deviations. We looked at the area of interest for the month of June, right? The PD area of interest for the month of June being, in this case, the order block of the dealing range low. Again, if price is really bullish, does it need to revisit this? But we'll look at those conditions once we look at other time frames. So that's covered for a higher time frame perspective. So our bias remains bullish until invalidation. What would be the invalidation here? Break below this daily swing low. Okay, this is an intermediate term low on the daily, right? Look, signs that is going to start trading here. Price, in my opinion, if price inverses this suspension block, right? We have two volume imbalances and a fair value gap right in the middle. If June starts to expand through these levels, okay, and fails to hold, especially this right here, the low of it, I start seeing fair value gaps, bearish order blocks being created in this range, then in that case you can anticipate that price will trade at these levels. Okay, you can already see the market structure shift happen in advance, but be careful nonetheless. Okay, you need to have the weekly profile form in alignment with this idea, because the market is really bullish. Okay, so bias bullish, and now if we look at the perspective of a weekly or daily profile coming inside Monday, well, obviously we saw that the closure of last week here was a bullish one, so this means that price can continue trading higher from these levels. In terms of discount arrays, the closest discount arrays in the range, we have a large rejection block, right? This was the day of Wednesday. Price traded higher but failed, came back in the range, and then Thursday reversed the range. right? So at these levels, what you find, well, we'll look at it on the lower time frames, but in this range here, you find on the lower time frames a bearish order block, and you find the range of an inverse bearish fair value gap, right? The fair value gap that created this wick price, right, has now traded above it at these levels, right? So if ever price were to revisit it, I believe that it can trade higher from those levels, all depending on obviously time of day and the daily profile. So in terms of discount array, on the daily, I think I would focus on this rejection block, but we'll refine these levels when we look at the lower time frames. If not, in terms of premium array, there's the rejection block of Friday, right? Price could create a divergence at these levels, or can create some kind of consolidation profile, okay, around the quadrants of this rejection block. So that's covered for discount and premium daily levels, okay, coming inside the day of Monday. Now we can start looking at the range of a 3-week look back. We can start looking at the profile of a 3-week look back. And what you can see here is that most of the accumulation was done in discount of the range, right? And this is represented by what? Well, it's represented by what we looked at looking at the previous month's range, right? Which was a dealing range low here. Right, so the 4-hour tells us the same story. Okay, so what you can do is you can keep these quadrants on your chart, right? This is the quadrant of the current range from the 3-week look back. And if price, well, first of all, let's see what's located at 25% of it. What you can see is that we have a 4-hour fair value gap that cuts through an order block, that cuts through the lower half here of a rejection block, right? This was that rejection of Wednesday. Okay, so very, very important fair value gap here. Very, very important, okay? Very likely if price will be bullish this week, Monday or Tuesday can create a low of week at these levels. Okay, if not, if Wednesday is going to make a low of week at these levels, we could see something like this, right? Some kind of double purge that then from there ends up trading higher. Okay, so this is definitely a level that, this is the level that we use to identify the low of day of Friday, right? But since Friday failed to expand from this fair value gap, I can anticipate, okay, a shakeout to happen, but for the fair value gap to still hold, right? So simply price coming back, maybe filling it, returning to the range of the order block and expanding from there. If not, right, if the market were to do what? To inverse this fair value gap, okay, big displacement through it, or a series of bearish order blocks created inside the fair value gap, then in that case the draw on liquidity maybe for the week, if not early week, right, simply to create a low of week to then trade higher. We have the range of the new week opening gap from the previous week, and right, and at these levels this is where it starts to get very sensitive for obviously not only the weekly profile but the monthly profile, as we saw that this is where we have the range of the bullish order block of the dealing range low, right? So we saw that this level here is of interest for the monthly profile of June, right? And this order block is being cut right through by that volume imbalance, that was left behind from the new week opening gap. Okay, so these are two important levels for the week. The fair value gap located at 25% of the current dealing range that we have. If this fair value gap were to fail, right, you see open, high, low, close daily profiles form around this fair value gap, then you can anticipate that the drawn liquidity will be a return to the daily bullish order block. Likely also will look like a closure of the NWAG, okay, or at least 50% of it filled. So that's that for the 3-week look back. if we look at a previous week look back, well, here what we can see first of all is that we can see the weekly profile of last week, which was a range to expansion profile. Okay, and here what we can see from the previous week's profile is that we have a lower time frame dealing range low, represented by the order block, okay, that forms the low of day of Thursday, right? Thursday here is the start of the expansion from last week, right? So, and obviously this order block is, in my opinion, high probability. Why? Because it comes from a divergence and it has a fair value gap cutting through it. Okay, so from a lower time frame perspective, so this is maybe more relevant to the daily profile, but could also be relevant to the weekly profile, right? What you can see is that at 50% of this dealing range, we have that 4-hour fair value gap of interest. Okay, so you can see that this 4-hour fair value gap, right? Obviously, Friday created a low of day at 25% of it, but like I was saying, it has failed to expand out of it so far, right? Yes, it traded into it, but it consolidated, right? In fact, the daily profile of Friday was a bullish swing to Z profile, right? So expansion to consolidation profile. Okay, so this fair value gap, very relevant for the daily profile, okay, in case you get either an open low high close or open high low close, right? The fair value gap will have to will be relevant essentially to the daily profile. We saw how this is all also relevant for the weekly profile, right? Having looked at the previous week's range and the dealing range low that are left behind, this fair value gap cuts right through 50% of it. And we saw that this fair value gap can also be very relevant for the monthly profile, as it is located right at 25% from the higher time frame dealing range low, right? So the current daily dealing range low that we have, right? This here is a 4-hour dealing range low. This is a daily dealing range low. And this fair value gap is right at 25% of it, okay? So the way that price trades around this fair value gap will tell you the story for the week. So this here is definitely the PDA of interest for the week. This fair value gap is backed up by a bullish order block, being the 4-hour dealing range low. It is also a balanced price range. Okay, this is something that we'll look at we'll look at on the 1-hour chart when we look at the 3-day look back. So a couple scenarios, right? Obviously, there's the open low high close profile that can form around it. There can be okay, say price trades higher, divergence at a key time of week. Okay, say say it can be between Monday and the previous week's high, or it can be between Tuesday and Monday. Right, very likely then price will end up wanting to revisit discounted levels. Sorry, I had to cut the video for a second. Yeah, so what I was saying, so we can have an open low high close. We can have some kind of double purge form. Okay, for the double purge to happen, ideally this happens early on in the week, okay, to give enough time for the weekly profile to retrace and expand. And if this fair value gap were to fail, okay, so you see displacement through it, then in my opinion you can anticipate that the draw on liquidity will be the new week opening gap. But until that is so, you want to keep trading higher, right? We saw objectives for the week, realistic objectives for the week, right? Say 31,000 to 31,500. How many ticks is that? Around 4 or 5,000 ticks. I think that is pretty realistic if this week will be an expansion week. If the market is really, really bullish, okay, so say from the open here, well then what I would want to see is strong closure or fair value gap above the previous week's high. If that's the case, then I don't believe that this fair value gap will need to be revisited to create the low of week. And that can be, we can be looking at a Monday low of week profile, okay, that can lead to expansion all week, or that can lead to expansion to consolidation, okay, or can lead to some kind of Wednesday reversal, right? I think that if the market trades higher first before trading lower, and while doing so creating strong closure or even better displacement above the previous week's high, okay, then I think those are the scenarios that we can be looking at. But ideally, today either sees a retracement inside our PDA of interest or sees a consolidation around it, right? And then that can allow for Tuesday to manipulate inside of it and then expand. Okay, so that's covered for a 3-week look back and the previous week's range. Now here we can look at the 3-day look back. And what's pretty interesting about this 3-week look back profile is the shape of the curve, right? Being represented through a double distribution, okay, or aka a double purge, right? Price first expanding higher, taking out sellers, inducing buyers also, right, on this rally right here. Eventually price comes back lower, induces sellers, takes out early buyers inside of this range, and then once it trades lower, okay, this is inside Thursday, ends up making a divergence again at the new week opening gap, and from there break structure, distributing prices higher, right? So we saw a distribution lower, a distribution higher, and this is represented through this right here. But what's more interesting to me is what's located right in the middle of that, right, of these two distribution phases. Obviously in discount, as we saw on the 4-hour, we have a dealing range low right here, right? This is represented by this. We had an old dealing range high, which if you remember from my outlook of Wednesday, at these levels we had a 15-minute bearish order block, right? And so what's sitting right in the middle of these two order blocks? We have a balanced price range, okay? This is what I was saying on the 4-hour before here, that not only is this a 4-hour fair value gap, but when you go on the lower time frames, you can see that it is a balanced price range, and in fact you can see that, right, we have a very large and obvious fair value gap that found sensitivity at first, right? You can see that the Asia high of Thursday came right at 25% of it, falls off, and then claims it, right? So inverse fair value gap, and while doing so creates, right, a series of 1-hour gaps, but also one big 4-hour fair value gap. Okay, so very, very important level for the week. Again, this is, if we look at the dealing range, right, this is right at 50% of the dealing range. And in premium, we have relative equal lows. Okay, so this can definitely look like something like this, right, to take out these buyers here. But this scenario, or sorry, this fair value gap can be left open if, again, like what I was saying before, we have a strong expansion from the open. Fair value gaps, strong displacement above the previous week's high, then we can anticipate that the previous day's low will be staying intact, right? They won't be made jagged, and we can anticipate opportunities such as retracement to continuation in New York. Obviously, all depending on what the previous sessions, how they trade, right? Do they leave fair value gaps behind? Do they consolidate? And obviously, how 9:30 opens, right? Say the previous sessions, right? Say here the market doesn't need to revisit the fair value gap, right? And expands from the open. All right. Well, did London or pre-market leave fair value gaps behind? If yes, ideally you want to see 9:30 trade lower first into them, okay, to give you a better entry for a trading opportunity. Just watch out if there's fair value gaps left behind, and 9:30 expands, right? And 10 a.m. opens right at the high of the range. In that case, you want to use the same idea, okay? Did the opening range leave any fair value gaps behind? If yes, what would you want to see? 10 a.m. making a low inside of them to then expand. Right, but if this expands but doesn't create any fair value gaps behind, then watch out for a swing to Z profile, okay, as of 10 a.m. Okay, so I think that's pretty much covered. We looked at a 3-month look back to give us a perspective of the higher time frame. Obviously, we are biased bullish until infinity, right? Because until the daily breaks here, we have no reasons to assume that price will retrace. So until the daily stays bullish, this can trade to 31, 32, 33, 34, 35, 40, 50,000, right? We don't know where it's going to stop. We looked at the range of the previous month's look back, which was a classic buy, and what we saw is that this range left an important order block, okay, because this order block is located right at 50% of the previous month's range. It has fair value gaps cutting through it. It comes from a divergence. It also fills the upper half, the upper quarter of a weekly fair value gap. Right, so very strong level represented as a dealing range low. Okay, so this is an important level for the monthly profile. Right, if price is going to start retracing into it first, disrespecting the lower time frame discount arrays in this range, such as the 4-hour fair value gap, then you can anticipate that the low of month can be formed at these levels. On the 4-hour chart, we looked at the range of the 3-week look back. We saw a refined view, okay, of that dealing range low from the previous month. And what we were able to identify from this dealing range, the current dealing range that we're in, is that price last week left a fair value gap right at the upper quadrant of this dealing range, and at 50% there is there's a range of high confluence here of discount arrays for the daily chart, such as the new week opening gap, the bullish breaker, the bullish order block, suspension block, BISI. Okay, so a lot of levels at this range. So if this fair value gap fails early week, anticipate that price can trade to these levels, and then either mid to end of the first week of the month, or okay, the second week of the month, you can anticipate a low of month to be created. That's only if this breaks, okay? If not, this can expand from here, keep on creating fair value gaps, and price retraces into them, or can from the open retrace into it to expand, or create a double purge. Okay, say if price makes a new high but fails to expand, might create fair value gaps, create strong closures, create bullish order blocks, then we can see a weekly profile where we get some kind of a double purge. And on the 3-day look back chart, we looked at those same exact levels, right? We saw that we have a lower time frame dealing range low here, represented by the low of Thursday, where price created a bullish order block from a divergence inside of the new week opening gap, and has then displaced the range through it, right? Leaving a balanced price range right at 50% of this current dealing range where the week is opening in. Okay, so again, that's the same idea, right? If price first trades lower, you want to anticipate expansion higher, unless there's displacement through this range. If not, okay, this level, 50% of that 4-hour fair value gap can stay unfilled. So far, only 25% of it has been filled from the previous day's low. It won't need to retrace inside this level if, again, it expands above the previous week's high. Okay, so very important level for the day, for the week, even potentially for the month, right? So this is a level that you want to keep on your chart all week, the range of the 4-hour fair value gap. And last thing before before I close this video, we can look at some standard deviations. This is maybe more for a perspective of a daily profile, right? So we're using lower time frame standard deviations from the main shakeout here of the previous week's range, right? That divergence formed at the new week opening gap. And we can see that so far price has stalled at 2 to 2.5, right? So if you're able to enter in a long, okay, say like this or like this, then you can have as a low hanging fruit target the range around 30,800 to 31,000. I think that can be a realistic low hanging fruit target for the day. We're looking at a range of about 1,005 to say 2,000 ticks. So if today will be an expansion day, I think that is pretty realistic. Okay, so that's all covered. Keep this level on your chart and we'll see what happens today, this week, and this month. We'll take it day by day.